I mean, when I first started, with our first, SDR client, when it was just getting going, I had a few clients that were sort of playing around with it. And when I looked at those first returns with the revenue they're able to generate, I was like, this is crazy. Compared to the long-term rental, it just is significantly more revenue. Now it's more cost. They have cleaning fees and they have, more utilities. So it's not like, it's easy. But the revenue compared to a long-term rental is, I think also enticing to a lot of investors.
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host. I'm glad to have you back listening to the show or watching if that's what you're doing on like YouTube or Facebook or something. We have a great guest today, Ann Gannon from Eastern PA. We're just talking about the old Pennsylvania days and beautiful state, guys. If you ever get a chance to go there and you haven't, there's so much history. I mean, you can't go wrong if you're a history nut. And there's the outdoors is just spectacular. You got mountains, rivers, farms, all kinds of cool stuff. So, in any case, enough of that stuff. I just think you should go to PA. And I just want to thank you for coming here and spending your time. I know as an accountant, you work pretty hard because most accountants I know are really good at working.
Yes.
And so I feel lucky to have you. But thanks for joining us.
Yes. No, thank you. I'm happy to be here.
Awesome. Hey, if you wouldn't mind, I love the fact that you understand investing in real estate in your practice and probably support investors already. But would you mind giving us a little bit of background? Like what led you to this? What was your paint a picture for us, you know?
Yes. So my first job was actually I grew up playing competitive golf. I played a year on the Future Tour, which is sort of the developmental tour for the LPGA, and then went back for getting a real job, which was accounting. Went back for my master's in accounting and started off, as most do, in a big firm in downtown Boston. And what I quickly realized is, my background had been a lot of entrepreneurs, like, most golfers are entrepreneurial in some regard. And, the traditional accounting firm really wasn't what I was drawn to. I really wanted to work with the entrepreneurs, the business owners. And at a big firm, you have a lot of red tape and, it's just a certain way. And what I realized is that really wasn't serving the business owner and it really wasn't serving me as the accountant. So I launched my own company in 2016 called Largo Group. And the goal was to transform the way accounting works for business owners to make it more of something, conversational relationship where we can talk all year, a flat fee. And that way, by the end of the year, we have a much better tax plan. We have a much better strategy rather than just here's your return and we're done. And fast forward to 2020. So we were, very heavily involved in restaurants was really kind of our niche up until 2020. And in March 2020, I realized, we needed to do something that, my dad had been an entrepreneur, his business had failed, and all of a sudden 90% of my clients had failing businesses that were closed. And so very quickly, we transformed to being a weekly approach. We really transformed to being something where we're going to help you forecast, we're going to help you plan, we're going to give you the owner back control of your business so that way you're not waiting for your accountant or your lawyer, but you know what you have to do every day to get through this hard time. And out of that also became this huge eye-opening moment for every business owner, which is diversification, right? That we need to be aware of, it's great to own a restaurant, it's great to own 10 restaurants until 2020, and now none of them are open, right? But the ones that were able to be more in control were really the ones that had bought their building, owned rental properties. And so all of a sudden, this tax strategy wasn't just about what you have today, but how do we make sure that you are protected and growing in any economic environment? And so over the last few years, even whether you're a business client of ours or an individual client, my goal has been really to educate on what real estate can do to your long-term investment strategy, just your overall long-term strategy for life. And I think real estate is one of these hidden things that people don't realize. I mean, inflation has been so real in business owners, in restaurants, but inflation has been a great thing for real estate. And so the ones that are diversified and owned real estate, they are fine, right? Like they're hedging against inflation. And even though inflation is bad operationally, it's been helpful in this other asset that they own. Whereas if you don't own real estate, inflation has just been a really hard thing to deal with over the last 3 years. So that's where I published my first book this year called The Real Estate Accelerator, which really talks about, as great as it is to look at the annual cash flow of a rental property or any of that, the long term is really where the game is won in real estate, and that's what Real Estate Accelerator talks about.
Yeah, yeah. Well, it's funny. You mentioned the kind of the state of affairs with real estate investing relative to the last 4 years, and it definitely changed a lot. I mean, a lot of states, were having they had moratoriums on evictions, and yet there really wasn't, and they had forbearances on mortgages, but for owner-occupied properties, not investor-owned properties. So here are the investors who are just regular folks, just like you and I, trying to make a living. The bank wasn't telling them, "Hey, yeah, just don't worry, you can pay us back later." No.
I
So
know.
they were required to still pay their debt and the bills, by the way, gas, electric, water, sewage, taxes, insurance, you name it. And yet the courts were saying, but hey, you know what? You can't take people to court to collect rent. It was a disastrous time frame for a lot of investors. And a lot of consumers had no idea. They just always think, well, investors are all rich people. They don't need that money anyways. Not
Yeah.
true. Some people are living off of it, just like you live off a job or a social security check or something. So in any case, it was crazy, but it changed they're really good entrepreneurs, always figure out a way to improvise, adapt, and overcome. And one of the things I noticed was is they started shifting away from traditional long-term rentals, where you have an annual lease, you rent to a young couple or whatever. They started shifting away from that. Did you notice the same thing? And what were they shifting to? Midterm, short term? If you could kind of talk about that a little bit, that'd be awesome.
Yeah, I mean, I think the short term world is one of these, it's almost like a, cult following that if you know about short term, you know a lot
Mhm.
about short term, but most people don't know anything about short term.
Mhm.
But really, from a tax planning strategy, it was this brand new world of here's this real estate investment that also is considered it most times ordinary income or active participation to where it actually can offset your other income, not just, capital loss or capital gain. And so it from a tax planning strategy, it's a completely different set of circumstances than your traditional passive, like you said, annual lease and sort of set it and forget it model. But I think you're right that I think the two things that happened were obviously a lot of the rules and regulations that came about long term, but then also how easy it is with the technology that, with the
Yeah.
Airbnbs and, a lot of these, short-term investors don't even live in the same town as the property. They're able to do everything automatically or with, a lot of automation there to where there's less, interaction with a guest or awkwardness with a guest. And you're able to manage more properties with less time. So all of a sudden, you're able to own, 8, 10 properties and just sort of click a button and open a door. Where before
Yeah.
COVID, that just didn't exist. It would have been a lot more labor intensive. You had a property manager. So I think the two things came together between technology and the rules
Yeah.
and regulations and also the income they can generate. I mean, when I first started, with our first, SDR client, when it was just getting going, I had a few clients that were sort of playing around with it. And when I looked at those first returns with the revenue they're able to generate, I was like, this is crazy. Compared to the long-term rental, it just is significantly more revenue. Now it's more cost. They have cleaning fees and they have, more utilities. So it's not like, it's easy, but the revenue compared to a long-term rental is, I think also enticing to a lot of these investors.
Yeah, yeah. It's interesting. You touched on a couple things here. Now, have you noticed? And I know clearly you can't give names and things like that. That could be a problem. But overall, did you notice that the people that were shifting their strategy from long-term rentals to either mid or short-term were there were they making more money? In other words, was the net greater as a result on average?
Significantly more. I think what you see is that they're able to generate, 15 to 20% at least to the bottom line in most cases, and those revenue dollars
Yeah,
are significantly higher. So all of a sudden, you have a lot of people that I work with that the goal is to replace their income, replace one income if they're a married couple, but really look at this as a business venture. Like this is not just I hope I break even and there's going to be some depreciation at the end of the year, but this is like I'm all in. Now I think on the flip
yeah,
side for those investors, anyone who's out there who's like I want to go buy an STR, like this is something that has become a business. I mean, these guys they work on their furnishing, they work on the interior, they work on amenities. I mean, they have like this down to a science of like, how do you get the best rents and keep yourself on the first page of Airbnb? Like, it's not, just something someone's doing for fun anymore, right? Where I think in
Yeah.
2020, it was kind of like, I'll get a condo on the beach and maybe it'll rent, maybe it won't. Like, these guys who are making the big dollars know what they're doing, and they
Yeah.
know what they have to invest in to get those returns.
Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to realestatewithgarywilson.com. Click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care. Yeah. We know there's some other factors too. They're not necessarily financial, but legal is the type of legislation that's coming out of Washington and even at the state level is definitely leaning far more pro-tenant and away from ownership rights. And I'm not knocking this, saying it's right or wrong or good. It is what it is. We need to be aware of these facts. And another thing too is a lot of states are now looking at rent control. So like California, the entire state, hey, we're going to do the entire state's going to be rent control. Well, that only applies to the long-term rentals. It doesn't apply to the short-term rentals, right? And another thing too is short-term rental landlord tenant law is far more pro-owner than landlord tenant law for long-term rentals. So in other words, the short-term rental law is more like the hotel motel business law,
Right.
where it's easier to get people out there. You're only supposed to be there for 7 days, whatever. There's a lot of other reasons for people to look at this. And I'm not saying give up on long-term rentals. Lord knows we don't want the government controlling any other more parts of our life than they already are. I mean, if our forefathers are here today, you're outside of Philadelphia. I mean, look at all the history there. Good Lord. They'd be rolling over in their graves if they saw what was going on,
I know.
So,
Yeah.
but again, it just, times change. I guess the country's changing, and if you're an investor, you got to be aware of these things and decide how are you going to act and react to these changes. And I agree with you, Ann, that what you're describing there is definitely a viable alternative. It's easy to do. I mean, my gosh, well, why not reduce the downside risk and increase the upside potential?
It's
You know,
true. Well, and I
yeah,
think, you touch on something really important with the asset protection. I think historically what I've seen in tax is the idea
mm,
of just keep it simple, like it can just go in my personal return that avoids another return at the end of the year, and why bother? And I think another thing that I feel like came out of, the 2020, 2021 world was like those tax returns matter. Right, all of a sudden, people who were trying to get, sort of the government assistance, the PPP programs, like everything came back to those tax returns. And on the rental side, what you sort of found once people shifted more to these STRs is we were trying to go get a loan, maybe leverage a property, take some equity out here, buy another property here. And if those tax returns don't show the accurate picture, which, many times they didn't, they weren't really tracking the expenses, they weren't tracking the revenue, it just was a mess. And now all of a sudden, you can't go get a loan because someone says, why would I give you a loan? Your first property doesn't do anything. So I think what we found is it's really important to understand your structure, understand how you're taxed. And I've seen a lot on the legal side where, we're on the tax side, but people who are investing in these, asset protection strategies or like what you said,
Mhm.
that it's great to have a short-term rental until someone has a slip and fall, or I have, 20 guests in my property every month, where if it was a long term, I didn't. So I think the idea of asset protection is very important. And if it adds a layer and it means you have another return, that might be okay if it protects you from, 100 people are in your property at the end of the year, that it's, you can have it both ways. It doesn't mean you can't invest in short-term rentals, but you want to be mindful of the number of people that you're now involved with and just protecting
Yeah.
yourself and your other assets. So I've definitely seen a shift to, like I said, even understanding the different states, that some states are more pro landlords, some
Yep.
are more pro tenant. So just making sure that you're in the right state, and, you can
Yep.
have a holding company in a state that's more protective. So I've seen layers and layers where before, again, it was like, throw it on the Schedule E and it's fine. But this is more of a business that you have more at stake, you have more risk, there's more rewards, but you also want to make sure you're protecting your risk.
Yeah. Well, let's you just mentioned business, and I want people to recognize, everybody listening here, when you own real estate, you can't treat it like it's something you're doing on the side, like it's a hobby, or it's a stock that you buy and or a mutual fund you invest in, or dollar cost averaging and chicken on it every now and then. It's an Even though it's considered a passive income stream in terms of the IRS, the word passive doesn't mean what it means to you and I in the real world. Okay. It Active real estate investing requires active real estate management. Even if you're not managing it yourself, you got to manage the manager. But part of the overall, what I'm getting here to here is the business structure. You've got to feel, think, and speak and act like a business person. You need to have the right business structure. So if we can talk about that a little bit, I know you may work with attorneys for structuring people's entities, and how are they? So what are you seeing that's working out there, like LLCs, trust? And if you don't mind, I want to tackle another question is, how can people create growth in the business? And does that the answer to that have a lot to do with the entity structure that they use?
No, definitely. I mean, I think, the idea is, like you said, you want to treat it like a business. You want to make sure that you're set up for, the life cycle of that business. You're going to buy the property, you're going to have annual returns, you're eventually going to sell the property. So what does that look like? Maybe you're not planning to sell, maybe this is something that's generational. That would be where you sort of go into more of that trust role, is like, hey, I don't ever want to sell this property. I'm just going to have it earn what it earns every year, and then I'm pass it on to my kids. Okay, well, that's something to think about. I believe firmly that everybody, both a legal and tax structure is different for everyone. That there's not a one size fits all, but you
Yeah,
have to really approach it with, what am I trying to do here? Am I looking for annual return? Am I looking for, more long term return? I really think for real estate, so before, is so many times we get so bogged down in, hey, did your property make $1,000 this year? Did it make $10,000 this year? And we forget about the long term of real estate, which is just you're
yeah,
hedging against inflation. So 10 years from now, the property is worth more and the rents are more because people pay more. So, making sure that when
yeah,
you look at the value of this property, you're not just looking today, but you're really looking 10, 15 years out to make sure. So many times, the minute the market drops, which, could happen, everyone sells. Oh, it's not worth my time. And I'm like, no, because you forget that, there's going to be ebbs and flows, but 5, 10 years from now, without doing anything else, you could collect more rent and that property is worth more. So just making
yeah,
sure that we look at the long term, is important. But I think in terms of vehicles, again, I think a lot of times the LLC is great because you can structure it as a multi-member LLC.
mhm,
An LLC can own another LLC, so you have more flexibility. Traditional tax world, tax accountants love S corps, but S corps can only be owned by individuals. So if we're trying to protect assets, S corp may not be the way to go, or even on your personal return, it's just, sole proprietorship. Like, we may want that protection with LLC. And a lot of times, like I'm saying now, it's more about the layers. Like, maybe I have an LLC that's owned by another LLC, owned by a trust, like
yeah.
you said. So I think educating yourself on the vehicles
Mhm.
and what works best for you is the most important.
Oh yeah, and you just hit on a key word on my team, the Global Investor Agent team. We have a motto, and it's this. It's you know, success is a result of, number one, the right education. Number two, the right information. Number three, the right action. And then number four, you get the right results. It all starts with education. You have to know you don't have to know everything. I shouldn't say that. You have to know enough about enough things to be able to make good decisions. And one of those things you need to know is who do you work with? So, the right accountant, like Ann Gannon, for example. Okay. So, in any case, I'm loving this podcast because I rarely get people like you, professionals that understand real estate the way you do. Hey, so let's talk. You talked about a little bit about entity structure and planning and long term. So, why is it so important to business owners to engage in tax planning? I mean, it's people a lot of times think, well, I got to file this form every year and I pay my taxes. And I'm like, no, there's like millions of lines of code in the IRS tax code. It's so big, it would fill up an entire library. It's huge. I forget the count now, and on the
I
number of
know.
lines of it's ridiculous. But
It's a
it,
lot.
yeah,
Yeah.
but if can you have like an example or a case study, maybe somebody helped where they came to you and they were doing things the what I call the big box method. They went to H&R Block and they just filed like a generic form versus someone who really understands because working with someone like you how to actually properly structure and prepare um, and take advantage of the code. You know, so without giving any names away, I guess so
Well, so what I like to say is, first of all, obviously, taxes are what they are. We're not, trying to evade tax anyway. But what I'm
right,
trying to do is educate people to understand the tax code because, a lot of times what you see as the difference between someone's effective rate, and I like to really look at your effective tax rate, um, is really the difference between decision making, right? If you're willing to risk and invest in a short term rental and, it needs all this work to get set up, well, that could be an effective tax strategy to lower your tax rate for the current year and also have this investment. So you still have risk, right? But that decision could lower what you pay in taxes this year. Now, I think just getting that information in your hands, whether you're an individual or business owner, during the year, that's where the magic happens, right? Because I'm not telling you to go buy a property. You don't have to, but I'm giving you the option of, hey, let's look at what that does to your tax return. And if it means you're going to get 20 grand back in a refund because you bought the property, maybe it makes sense based on the other things that you want to do in your life. But if you don't have that information until March or April of the following year, can't do anything about it, right? So that's where the
yeah,
one thing that everybody should do is look at your tax return and your tax strategy before the end of the year. And I say the same to business owners, right? If you need extra supplies or you want to bonus your employees and you had a good year, maybe you pay them before the end of the year because you get the tax write-off. But if we don't look at it before the clock strikes midnight on New Year's Eve, there's nothing else we can do, right? So that's where it can feel very reactive. But I really look at it as the best decision for anyone is to just shift forward. By October, you're looking at this year, you're strategizing for this year, you're coming. I had one guy, we got to like 8 scenarios. It was Roth conversion, it was we went everywhere, right? But at the end of the day, we now had a plan. And so he made the
yeah,
decision. He's going to convert his Roth IRA and whatever, but it was based on now he knows what that's going to do is return. There's no guessing. And I think that's
yeah.
where you can really take the stress out of tax returns is if you have the information and you make the best decision for your life, not just taxes, but your life, and you feel comfortable with we looked at everything, we asked all the questions up front, and now we're good to go before the end of the year. So that's what I think it is really about when we look at it rather than
Right.
what to look at.
Oh yeah, because there's things you can do throughout the year to take advantage of, any information, any new information you may have or what you may have learned and take advantage of like you just mentioned a Roth. I mean, a lot of people don't realize there's a hybrid out there called a Roth 401k. And if you look at, it's clearly post-tax income that you're putting into the Roth 401k. But the difference is you can put up to 23,000 a year in there. And if you're in the catch-up mode, it's like another like 30,000 a year. That's incredible compared to most other retirement vehicles where you're limited to like 6 or 7,000. Nobody can live off of that in retirement. That's ridiculous. So,
Right.
but I want to ask you this, if you don't mind, on the speaking of businesses, I've built several businesses myself, and thankfully more of them did well than the ones that didn't do so well. But sometimes it was like, the big recession, Congress was changing rules on how appraisals were done and how lending was done. and I just happened to own an appraisal business, and I was getting ready to launch a bank. I already had brokerage and property management and all that. Um, so what is there other than those types of things like that, like a recession or the pandemic, is there one thing you can point to that a growing business does that sets it apart from one that's not growing, that's struggling, you know?
So I really think it's, I think, like I said, what we've learned from any of those times is I really think
Mhm,
it's weekly accountability and having a target that, if you
mhm.
stay ahead of, where you want to go, you have a weekly target, you have a weekly accountability for your team, for yourself, for cash flow, then whatever happens, you're able to be proactive and respond. If we're waiting
Yeah,
till the end of the month, we're waiting till the 15th, 20th of the following month to even look at last month and what happened. Well, 45, 60 days have gone by before we're ever able to make a change. And I think too many
yeah,
times as business owners, we get stressed and we don't want to look. And, say with real estate, it's bad, so we don't want to look. But the key is that we just need to make ourselves look at it every week and really have a target for where we want to go, because some of the best businesses have been built in the worst economic environments. But I think that's because they were always focused on where they wanted to go and not reactive.
yeah. Great. I love that. I appreciate it. Hey, you mentioned an accelerator early on in the book. What is an accelerator? And I guess the bigger question is, what does it mean then to apply that to real estate? What does it mean to be a real estate accelerator? You know? Mm,
Yes, so the idea of being real estate accelerator is that you're not just looking at today, but you're really planning out your 5, 10, 20-year plan. A lot of what I do with our real estate accelerator clients is build that out. Like we might start with current year and here's 2024, here's the savings, here's what we're going to owe, here's, our immediate plan. But then my second phase is to really go to year 10 and year 15, because that also can take away some of the stress of, like I said, down market, down rentals, all of a sudden it can feel like, oh my God, I invested in, a dud, I need to sell, really forgetting that without doing anything, you will have higher rents in 10 years, you will have higher values in 10 years. I mean, my best example is, the first house I bought was right before 2008. And, within 6 months, the house was worth half of what we paid for it. And my husband's like, oh, we have to sell and we got to get out. This is, a terrible investment. I mean, if had we owned it today, it would be 3 times what we had bought it for. So, I mean, the inflation is real, and it's not like the house is any better than it was back then, right? It's just that so many times in
mm,
real estate we get caught in the day to day and we forget the long term. So, as an accelerator, it's remembering that you are in the driver's seat and just staying ahead to build your own target for net worth and portfolio, and let the day to day happen. It's not always fun, but keeping the eye on the target is what makes you an accelerator.
yeah. Awesome. Um, well, I want to go back also. I keep thinking about the book and the website too. Well, tell us. I'm thrilled that you've written a book, and I love it when people do that. I know the first time I wrote one, I thought it was going to take like months and years, and I kept telling the publisher editor, who's by the way also in Pennsylvania, not too far from you. I'll give her a plug, Demi Stevens. She's awesome, guys. But she said, look, you're way overthinking this. It's a lot easier than you think. She said, just do an outline and start filling in, going through your outline and talk about the outline. You can talk on a recorder, and then we get it all transcribed. So I got a place on the Chesapeake Bay for 3 months on the water, thinking I'm going to take me 3 months to write a book. Bought my paddle boards, I had a speedboat, my dog, and everything. Guess how long it took me to write that first book?
How long?
About 3 hours.
Wow.
And another week or so to really flesh it out. And Demi, she beat me up pretty good because I was a true novice. But in any case, I decided, well, what am I going to do now? I got this place for 3 months, so I wrote 5 more books. you know,
Oh,
or four
wow.
more. Sorry, 4 more, five altogether. And I had the best time. It's a lot of fun when you do it, guys. I promise you, it's fun. But in any case, back to you. Tell us where can people get the book and what will they find in the book? You know.
Yes, so Real Estate Accelerator is on Amazon,
Mhm.
and also on our website. If you go to the largogroup.com, that's our main company, but it does list all of our real estate as well. So, you can find us on there. What we do is offer a lot of strategy sessions, consulting, a lot of, tax planning advice at the end of the year. So if you subscribe, you'll get all of our emails and learn what's going on. But, whether you use us or not, like I said, I think the biggest key for anyone listening is to really build your strategy now. And as silly as it sounds, it really will be eye-opening to really seeing that you are in control of your tax picture at the end of the year.
Yeah. Yeah, I agree. I tell you what, one of the biggest lessons I've learned in life, and I can tell people is, you know what, start early. And if you're in your 50s and you haven't started yet, start now. Okay. Definitely have a vision for what you want. Before you write your goals, have a vision first, then create your goals so it'll be in alignment with your vision, because your vision won't die. Your goals will change from year to year, but not your vision, right? And then you can do an effective plan and execute. I mean, I know I'm probably simplifying it, but it really comes down to that. A lot of people go through life just letting life, you know, they're reacting to life. I'm not saying you shouldn't be present and enjoy the outdoors and all that. I love all that. But when it comes to your business, you have to be strategic. In order to do that, you've got to have the vision, the goals to go along with your vision, and then a plan to help you execute your goals. So I want to talk about. I know we're getting closer to the magic half hour, but I want to talk about the largogroup.com. So is this yours? Can people take advantage of working with you from around the country, or
Oh,
tell us about that a little bit,
yeah, so the Largo Group, one of our big missions, like you mentioned, is to educate. So whether
Mhm.
you use us for accounting and tax services, we do offer, monthly coaching calls. We have online classes. So our biggest goal is to help business owners improve. To start here, but build that target, build that long-term plan. And so there's lots of different ways to work with us, but whether you work with us or not, subscribe, because we also offer free courses throughout the year to provide that education to business owners and individuals, who are looking to improve.
Okay. So they just go to the largogroup.com and it'll still see like a menu of things they can
Oh yeah,
click on and drop in. Oh, awesome.
yeah.
Okay. Well, listen, I really appreciate you sharing this. How can people get a hold of you? What's the best way for people if they want to, because they're going to talk to you. They're not going to talk to, they have heard from
Yes.
you.
Yes. So send me an email, agannon@thelargogroup.com, and I'd be happy to share more about us and to stay connected with you. Because like I said, our biggest goal is to help people improve where they are, especially in real estate, and to see the long-term benefit of real estate.
Excellent. So a Gannon at thelargogroup.com.
Yes.
Okay. Well, guys, everybody listening here, I mean, I hope you got as much out of this as I did. I loved having Ann on. If you could leave a review for the podcast, we really appreciate that. Doesn't cost you anything, and it's 60 seconds can make the world of difference for podcasters and podcast guests like us. So we really do appreciate that. And Ann, thank you again for joining us. Appreciate you. Appreciate you, the listener. God bless all of you and your loved ones, and we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.